is John Piper with a weekend video, and it's Saturday the 5th of January, and I said in Thursday's report we'd look at the Nikkei, so we'll start with that market. Nikkei peaked in 89. This is one of those peaks that came in just around the new year, the most positive time of the year, celebrating the year gone by and of course the year to come. So at that point we were near 40,000, but of course it's never got anywhere near that. In fact, the market's been trying to retrace 50% of the previous fall and has been rejected 3 times now, twice I suppose. Spike there, a bit of a spike there as well. Wave pattern, well, this could be an A, B, C. This could be a B wave in fact, so it could be that we're going to see another substantial fall down. However, alternatively it could be a 5. 1, 2, 3, 4, 5. It does count quite well as a 5, but there is a possible A, B, and a 3-part C. So it's a bit uncertain. But what we've certainly got is a clear reversal from this point here. So let's have a look at that. Well, this is a very clear pattern, which is good to illustrate from the point of view of, is it a 3, is it a 5? Now clearly it's a 3 at the moment. A, B, C, B, and a 1, 2, 3, 4, with a possible 5th wave coming in to complete what could be an ABC. However, the alternative count, fairly obviously, is a 1, a 2, a 3, a corrective rally, to be 4, and then a 5 to come, which obviously is not in yet. So the action from the low, whether it's in that already or whether it's to come in, is fairly critical. If we see an impulsive rally from this point, then that would suggest that this high is going to be taken out. If we see a corrective rally, i.e. a wave 4, then it will suggest that we're going to see a 5th wave, but the high on the Nikkei is again in earlier this year, a couple of months ago, and that the trend is now firmly down on the Nikkei going forward through the current year and beyond. And same considerations apply to the Dow, the DAX, FTSE, etc, etc, etc. They all have their different permutations, but let's now have a look at the Dow. Now looking at the Dow, we had the peak back in October, clear 5 waves down, we've discussed that. A, B, C, with the C wave failing to take out the high of the A, which is a sign of weakness, followed by a 1, 2, 3 move, with a possible flat correction up to here, but still needing a 5th wave to complete this pattern. I mean, nothing in markets is mandatory, but obviously at this point we need to see a decline pretty immediately. If this pattern is going to remain with its integrity. If in fact we shoot up above here, particularly above the low of wave 1, which is not now so far away, then the whole thing will become an ABC, A, B, with a 3-part C wave. So that's pretty critical action. As I've said before, there's schools of thought suggesting that the peak will come in this year, so we will see new highs in 2019. As I've said before, I prefer to watch the action and see how it behaves. Right now it is open to interpretation. Let's have a look at the action since this low though, just to see what that might tell us. Well, firstly, from this low here, we can certainly count to 5. 1, 2, 3, 4, 5, followed by an A, B, C. So it could easily be a new impulsive action. We've got this rally here which has been pretty strong. It's held the highs at the close of the year, which is and the beginning of this year, which is a positive. So yeah, it's possible that we are seeing new impulsive action, certainly fitting with the wave. Alright, ditto FTSE, similar. I mean, FTSE had an ABC to start with, so more clearly a correction. Easily be a 1, 2, possible 3 in transit, but again, you know, A equals C, approximately where we are already. I mean, the C wave's gone a little bit further, but not too much. So, you know, it really is touch and go whether we go up or down at this point. it's a question of seeing how things develop. We've got the wave patterns allow for either interpretation. Same on the DAX. It could be an A, B, C, where A and C are approximately equal already, or we could just keep going up next week, and that would tend to confirm that we've seen a key low. Right, gold's still looking good. We've got the 1, 2, 1, 2, 1, 2, 1, 2, 3, 4. So we do a fifth wave rally above 1300 to complete the move from here. Then a further correction and another rally. So the acceleration phase, which is phase here, is probably over at this point. So I expect some toing and froing above 1300. Then a fall back below 1300 as a corrective fourth wave before the fifth wave comes in. But still looking good. The danger points we only move above 1250. That would not be good at this point in time. In fact, there's that spike low down here as well, which is of some importance. Let's have a look at the shorter term action. So from the peak just below 1300, we've got an A, B, C, B wave, C wave, and then a blip up, which I would expect to be a new impulsive move, given the wave pattern we're looking at. But clearly this level here is of key importance. Alright, Bitcoin. In Thursday's report I said that I expected the cryptos to see a substantial rally this year, but the low may not be in yet, and I expect equities to see a substantial fall this year, but the high may not be in yet. So we discussed equities. Let's look at Bitcoin. We've got a very clear 5 waves up here. 1, 2, 5 part 3, ABC 4, and a fifth wave. So a clear 5 advance. It then gets a little bit murky. If that's an A wave, this could all be some kind of B wave. It's not clear that. I mean, certainly it seems to be going almost very much like a triangular type formation. So another leg down is quite possible, I think, on Bitcoin. And clearly a move below 3122 or thereabouts would negate the pattern we've seen and allow for another sell-off, obviously. And I prefer to see some action here rather than this drift sideways, which is not too encouraging. We could just blip, of course. It could be some kind of complex. Clear this. Complex A, B, C, perhaps. I mean, there are 5 waves there. 1, 2, 3, 4, 5. A, B, C. So, it's possible that we could just see a thrust up, and that we've got a sign of strength here that the C wave couldn't actually achieve very much, even to take out the A wave low. But I'd rather see strength rather than lack of strength on the downside as an indicator. Looking at Ethereum, we have a far more positive pattern with a clear 5 waves up to there. A, B, C, followed by another 5 here. 1, 2, 3, 4, 5. A, B, a flat C, which again is a sign of strength. So maybe we should be a bit more positive on Bitcoin. We went officially long of Ethereum, I think last week. This was encouraging. Another 5 waves up. Another A, B, C, and we just need to break above. In fact, we have broken above the high already. In fact, albeit rather minimally. So Ethereum is leading the way right now. Bitcoin is lagging slightly, and the various other cryptos like Ripple, which is sort of betwixt and between slightly. But I think Bitcoin and Ethereum show the patterns quite well as an illustration of strength when we get to Ethereum. And on Bitcoins, we have got that failure of the downside move, which is a mild positive, but as I say, I prefer to see a strength on the upside rather than weakness on the downside as an indicator. But right, so it's looking, I think, potentially good, and if we do see a good breakout, I'd expect to see another move of equal length. So this is 80 up to 160, $80. So from the low here at around 110, so 190 is a minimum target for this move, and a break above 200 would give us some confirmation that we actually have seen an important low on Ethereum and possibly on the cryptos as a whole. So on that note, I think I'll call it a day. Hope that interesting and useful. Back to the report on Tuesday morning Have a great weekend, thanks for listening, and bye for now.